Okay, I'm going to go live. Let me get this ready. Alrighty, we're gonna go live, and then kind of the same old, why don't you just chat for 5 or 10 minutes while I work on the sharing. I'll share this over to Block United. Is that cool?
Yeah.
Okay, so this is public shared everywhere. We can talk about stuff. We can also talk about, let's talk, we could talk about privacy without giving away too much, I think. And let's just talk pump and dumps, and, right now, XVG is hot in terms of some stuff that happened, so worth the conversation.
Yeah, I think it's actually cold right now, but it's hot, and recently. Well, yeah, let's talk about that.
It's hot it's probably not hot from an upside potential. It's hot from like a drama controversy.
Right.
Already? Cool. So I'm going to go live in 3, 2, 1. Hey, we are live. Why don't you take it from here, Mark?
All right. Good morning, everyone. Thanks for tuning in with us here. We're going to do a weekly kind of just market recap. Lots of things have been going on. Obviously, we just had the holidays with Christmas and Christmas Eve. And, the markets have been pretty screwy the last week or so. I think the holidays play into that a little bit, although I'm not going to say that that's the reasoning or the problem behind it. When it comes to markets and movements, a lot of times, we're used to kind of looking at factors, what we call like fundamental factors that affect us. But the thing is with this market is that this is a global market. And so, if any of you guys have been investing in, traditional stock markets and things like that, we're used to seeing certain patterns happen. For example, at the end of the year, a lot of times you see a sell-off, one, maybe for Christmas present buying, two, also for tax purposes. But those types of things don't necessarily work on a global level because like other countries have different year-end reportings. A lot of countries don't celebrate Christmas. So there's a lot of things to consider. However, the Western part of the world that does have those factors is a big contributing force. So we're seeing that. But if any of you guys have seen my previous post where we talked about where the market actually kind of sold off from, it doesn't really need a reason. What I mean is that it doesn't have to be why did it sell off? Was it because Christmas? Was it because of New Year's? A lot of it's just normal market movement, right? So we talked about that a lot as something moves up really fast and it moves up kind of even faster than it's supposed to. We just know that it's set for a retracement. So hopefully you guys have been studying a little bit of history. You've seen some of the posts that I put up. The one that I put up last week, I think, was like basically once a month we've had a correction. So we knew we were headed for it. It's just normal. There's a chart going around, I think maybe Charles had put up, where it actually showed that Bitcoin had a major correction at least once per quarter all the way back to 2013. So if you're new to this in the last 30 days or so, maybe it seems a little scary. Of course, the media loves to jump on bad news like this. But if you've been in this market for longer than 30 days, 2 or 3 months or 6 months, then by now that this is just normal. So definitely no reason to panic, but let's just take a look and see what's going on.
Yeah, hey Mark, maybe do you have that chart handy? Maybe it'd be good just to put it back up for everyone to take a look at.
Yeah, sure.
I think we've been sharing it with our paid subscribers, and this is our weekly open to everybody type chat. So I don't think people who are catching this may have actually seen all the details. And I imagine, I don't know how it was for you, but I think I told the story when that first crash happened. I think it was like Wednesday or Thursday night. It was my girlfriend's birthday, and we're getting dinner, and my Blockfolio app is just kind of I'm just checking it every so often because she likes to take pictures of the food. So I'm taking a picture of the food that gets brought up. I look at the Blockfolio app, and literally it was like every bite I was eating, I probably lost $1,000 or something crazy.
Yeah.
on that front. So, okay, so yeah, here's the chart. Why don't we just like talk about that? I mean, definitely, the chart probably has to be updated because, the market cap today, right now, I think are we back up to 500 or 600 billion by now? I mean, it seems like most of the stuff is recovered. I mean, I'm just looking at Bitcoin right now. Is it 16 grand right now, or
Yeah, it's about 16K right now. I mean, it had dropped down. Some charts had it as low as 10 or 11. Most charts it really held around 12. Um, but so this chart was put together on December 22nd, which was 4 days ago, and markets move a lot over 4 days. This was just kind of put out to just try and put things into perspective. So like I said, the media loves to jump on bad news. And so you see the market take a 20% drop, 30% drop, and people freak out. The media wants to jump on board and say, we said that, Bitcoin was volatile. We said that it was, could go to zero. And they really try to spread this FUD, right? This fear, uncertainty, and doubt. But what we want to do is we want to go back and study history so we can kind of help predict what the future is. And it just gives us some perspective. So if you look at this, you can see back in May, and this only goes back to May, so like 6 months ago, May 24th, the market was only 90 billion. And so as we just said, I mean, the market's 500-600 billion today. So to go from May 24th to 90 billion to 600 billion, I mean, that's a 6 times return, which is basically unheard of. I mean, to get a 10% annual return in a normal market is really, really good. So 600% is just unbelievable. And so to really put things into perspective, before we get into all these numbers, if the market were to drop 75% today from where it's at today, it would still be the annualized the best return in any market in the world.
Wow.
Let that just sink in for a minute. So even if it dropped 75%, it would still be the best market in the world. Now, a lot of you guys got in the last 30 days, potentially. So you're sitting in a different place. So let's just look at this, though, so we can kind of look at the history. So we hit 90 billion, and it quickly dropped almost 30% to 64 billion. That was over 3 days. We had a 30% drop over 3 days. Then over the course of about 17 days, it raised 81%. So from 64 to 116, that was an 81% increase. Then from June 14th to July 16th, which was about a 30-day period, it dropped 42%. So we had a 30% drop, and then like a month later, we had a 42% drop. Then we had a pretty sustained climb over about 45 days, and it went up 165%, which again is amazing. Like I said, if it could go 10% in a year in any normal market, that'd be really good. So to do 165% over 45 days is amazing, up to 178. And then boom, another crash over 12 days. It dropped 45%. So huge. So 42%, then 45%. I remember this one pretty vividly. I had started to get a lot of traction, and a lot of people were listening to what I was saying right around this time. And that was the biggest drop of the year, 45%. And so I answered just so many emails and phone calls and text messages. I mean, you name it, right? Everybody thought the market was done. This was really China, when China came out and said that they were going to ban all ICOs. The SEC in the United States said they were potentially going to regulate ICOs. Then China came out and said they were going to stop all Bitcoin mining, Bitcoin trading. And that was really kind of what really put that one into a tailspin, 45%. Charles, that was when we were in Boise. And I really remember that one. Now, from September 15th to November 29th, another 45-day run, it went up 250%.
Wow.
Amazing. Over 45 days, 250%. It dropped again, another 15% went up. It looks like that number is wrong. I apologize. But you can see it ran up again, dropped off again, another 20%. And then it ran up again even faster. So you can see how there's like a normal trend line. And then that last part, it almost goes to vertical. And so it's leaving the normal trend line, and it has to correct down. So on December 22nd, it corrected 35%, which is big. But as you can see, just in the last 6 months, it was only actually the middle correction, right? We had a 45, a 42, and then we had a 35. So it wasn't even the biggest or the second biggest correction that we had just in the previous 6 months. And so the reason why it's important to look at this is because, for those of you guys that are new or even just thinking of getting into the market, you just got to realize, like, this is just how it goes. And I think if you realize that getting in, it's going to help you stomach this, moving forward.
No, that's interesting. So, the first question I think that pops in everyone's head, and, I'm going to give an example because I know we talked about this, is, all this volatility, why can't I buy the dips and time the tops, right? I'm making good returns here, but, we all want to make better returns. So,
the reason is two parts. So, yeah, as Charles said, just to kind of just repeat that, time, when you look back in hindsight, it's like, oh, I'll just sell here and I'll buy here, and I can make the difference in between the dips and the rises. And in hindsight, it looks super easy to do that, but it's impossible. Now, you might get lucky with it occasionally, but nobody can do this. And the simple fact is we just don't have a crystal ball. Nobody can tell the future. So there's two reasons why you can't do this successfully. Now, like I said, you may get lucky. And if any of you guys think you can do this on a regular basis, contact us because we're looking to hire people. And we'd love to find out how you can do that. But there's two reasons why. One, as I said, we don't have a crystal ball. So what we do is we use, really anybody in the world will use two different types of methods to analyze markets. And one would be fundamentals. So fundamentally, like, for example, we know China, which is a big market, is going to shut down all cryptocurrency. So we know that that's going to have an effect on the market, right? That's a fundamental reason. We also know right now, fundamentally, all of Wall Street, which is hundreds of billions or even trillions of dollars, is about to get into the market. So we know fundamentally it's going to bring the price up. Now, we don't know when. We don't know when that's going to happen, right? But those are fundamental reasons. The other thing that we use is what we call technical indicators. So we can look at the charts and we understand how markets move, and that after they run up, they want to retrace. And there's what's called Fibonacci retracement line. So it goes up 0.68, down by 1.68. So there's like certain numbers. But again, that doesn't help us tell the future. It just kind of helps us to be able to read the signs and react to what's happening. So we can't tell the future. But the other reason why it's impossible to time the markets is pure human emotion, just to put it simply. Humans are really only motivated by two things, and that's fear of loss and potential gain. All right. And so what happens is our greed and our fear rule us, and it makes it impossible for us to take action. So as the market is climbing, we know that the market has climbed pretty high and that we should probably get out. Because we know that a retracement's probably coming. And I told you guys many times leading up to this that it was. But greed takes over. And we don't know when the market's going to stop climbing. So when it went from 10,000, 12,000, 15,000, 16,000, 18,000, at what point are you going to get out, right? All of a sudden, you want to get out. Oh, it went from 10 to 15,000. I'm going to get out. Well, it went to 20,000. You left all that money on the table. And if that happens to you once or twice, you're going to have a really hard time getting out of the market. So that's the first one. That's greed, keeps you from doing that. The second part is that when the market is crashing, now fear takes over, right? And so the market's crashing and it went from 20,000, 18,000, 16,000, 15,000. Now, at what point is the bottom? Where's the bottom? I don't know. The media is telling me it's going to zero. I need to protect my profits. And so all of a sudden it settles down to like 10, 12,000. People were selling all along the way, taking massive losses. And then, then the market drops all the way to 10,000 from 20,000, and the media is telling you it's going to zero, and nobody's going to buy. Is that the bottom? I don't know. It could go to zero. I'm lucky I got out at 15. I captured some profit at 15. No way I'm going to buy back in right now. So it was greed that kept us in at the top, and it's fear that keeps us from buying at the bottom. And then, unfortunately, what happens for the majority of people out there, especially in the crypto markets, is that they move super, super fast. And so, boom, within a day or two, it bounces off the 10,000, it's back to 15,000. And a lot of people sold at 14, 13, 12,000. And now they got to buy back in for higher than they sold. So not only did they lose by selling cheap, now they got to buy back in higher. So they're actually doubling their loss. So that's just fact. That actually follows, most traders. And an interesting fact, this goes to the stock market. This isn't with crypto markets, but an interesting fact. I have a sheet on this somewhere. I'll see if I can pull it up. But an interesting fact is that if you would have sat out just 25 days over the last 40 years of trading in the traditional stock markets, you would have limited your returns down to like 90%. I forget the exact number. I got to pull it up. But just 25 days over 40 years if you would have missed them. So I sold out and I missed those return days. And so that's why I don't believe buying and selling, timing markets, trying to sell tops and buy back in. It's not that I don't believe it. Fact, history show that it's not successful.
It's kind of funny that you bring that up. So I think we had a conversation, and I decided, over the weekend to kind of play some of this market timing just for kicks and grins. So I think you remember, we had a little talk, and I've been looking at the charts, and after what happened, I think it was Thursday, it was like, hey, we were due potentially for some correction. Right. So, I basically turned about 20% of my position into cash, or not cash. Basically, I ran it as, USDT Tether. So it was on the sidelines and ready to go. And I was looking at the charts, watching the stuff go up, watching it go down, watching it go up, watching it go down. And I mean, I wish I could say otherwise, but, I probably gave up about 10 grand in gains, trying to time ups and rebounds. And, I don't want to say wasted, because I did learn a little bit, but, burned up about 10 or 15 hours of like looking at stuff and everything. And, yeah, I mean, life would have been much better if I just like held, went to bed and stopped checking.
So life would have been better for two reasons. One, you probably would have had more money, and two, you would have freed up all that time and emotion that you put into this. And so, that's also a great point. I think, we all want money, but money doesn't rule the world, especially, or our lives. It shouldn't, and especially during the holidays. So it's like you said, you're out to dinner with your girlfriend, you keep checking your phone, and I'm guilty. Probably everybody watching this, if you're in the market, you're guilty. But it's like, man, there's way more about being wealthy than just money. Enjoy the time with your family. Don't be stressed out over it. You would actually have just had more money had you just put it away and forgot about it. So, those are both really good points that you bring up.
Yeah, no, that's interesting. So, that being said, I think it's worth talking because, everyone, we all say we're going to hold on for dear life. But then the reality, let's talk a little about pump and dumps and everything going on. Right now, there are big movers.
Before we do that, I just want to add one thing to what you just said. We all talk about holding on for dear life. So there's a bunch of terms that we throw around in the space, which are kind of new to the space. So there's HODL, HODL, hold on for dear life. And so that's a term that we use. And what that means is we're holding on for dear life because, as you can see, just in the last 6 months, the market swings are just crazy. So you're just holding on for dear life. Now, I put out a post to most of the subscribers and kind of just explained what I do. And I hodl, and I explained why. And I explained why it's impossible to sell at the bottom and the top. Now, the key piece that I put out, and I want, well, actually there's two pieces that I want to kind of reiterate here, is one, there's maybe three. So one is that we're investing in a technology of the future. That's why our potential gains are going to be so massive, because we're in really, really early. We're in way earlier, right? So we're investing in a technology of the future 1, 2, 3 years out. I mean, for me, I believe that probably most of my positions, I probably won't sell any of my positions for at least 2 or 3 years from now, because they're not going to be fully matured. I mean, there's all kinds of stories of people who sold their Bitcoin and made amazing returns, but now they could have had $100 million had they kept it, right? So they got out too early, and their returns were great, but they got out too early. So I don't want to have that problem. So I'm going to be holding for multiple years. And so because I believe this is the future of the technology that I'm not going to profit in for the next couple of years, what happens during Christmas or over the next month or the next couple of months doesn't really matter to me. Whether it shoots up super high or goes down super low, it doesn't really matter to me because I know this is a technology of the future and I'm not looking to cash out for a couple of years, regardless of what the price is. So that's number one. Two, I see the markets moving and I understand that this is all part of it. And I know that it's going to come back again because this is something we're investing in the future. Now, we've said many times that all technology adoption cycles are the same, whether it was the automobiles in the early 1900s, the tech stock bubble in the 90s, or this. And probably at some point, 95% of these companies will go to zero and be gone. So at some point, the HODL strategy may not work as good and it might be really long and scary. And so that's obviously, as you might imagine, something that we're studying very intently and really we're looking for signs. And so at some point we're going to be taking profits to be prepared for that winter. But anyway, those are the things that help me to HODL. And so like with Charles, he was getting in and out of the markets. Now I've been in this market for a couple of years. So for me, I just shut it down and I spent Christmas with my family and had a wonderful time. And I don't care. So anyway, hopefully you understand. Oh, and the third point I wanted to make is that the beauty of cryptocurrencies is that they are asymmetric returns. There's really nowhere else in the world that I know of that that the average person, I should say, can get access to what we call asymmetric returns. And what that means is that we have unlimited upside or huge upside with very limited downside. So in this market, you could literally turn $200 into tens of thousands of dollars or more even. And so because of that, you only need to be putting little bits of money in, $200, $400. That's all you really need. And so what I tell people is that if you're stressing out, if you're losing sleep over it, that just means you have too much money in the market. So, pull back some money if that's the case for you, because you shouldn't be stressing out over it. So anyway.
That's an interesting one. I saw your post and luckily I'm in that position, but I think you made a point, right? If you actually care about losing the money, you're probably investing more than you probably should in the market, right? So for example, if I needed my portfolio, my problem is I like to optimize every last nickel, to the time being, but if I really needed my portfolio to, cover my mortgage or buy for food or go on that vacation, that's probably money I shouldn't have in my crypto portfolio. I should probably have that in my real estate portfolio or my stock portfolio or things.
Or your checking account.
Better yet, yeah, definitely. Or my checking account.
Yeah, I mean, the first rule is never invest what you can't afford to lose. So yeah, you definitely shouldn't be investing your spending money, your bill money, things like that in this account. This is investing, and it's speculative investing, meaning it's more risky than normal. So maybe if you want to invest some of that money, maybe look at more safer avenues, bonds or treasuries or something like that. But in any case, yeah, don't invest what you can't lose, and if you're losing sleep over it, take some money out. I mean, for me, if I put $400 into one of these positions that could potentially turn into $50,000, if I put $400 in, I don't care about that. If I were to lose that 400, it's not going to bankrupt me. I'm not losing sleep over that 400. So each one of you have your own amounts. If you're a multi-billionaire, you could put 400,000 and it doesn't move your needle. And some of you guys, $40. So it's up to you, but just make sure that amount isn't making you lose sleep.
Yeah, no, definitely. So, let's get now into kind of market sentiment and emotions and stuff like that. And I guess what is scary as heck to me is the fact that this market is so emotional, right? And I guess that comes into play because people are betting on technology that hasn't been developed with teams that potentially are still completely untested that no one even knows about because these are distributed teams, with products that are literally just a concept, but we're talking hundreds of millions, if not billions of dollars, are at stake. And I'd like to kind of maybe talk a little bit about some of the latest, kind of comings and goings in the marketplace, right? Specifically, there was IOTA a couple weeks back, and the whole drama or or lack of drama, depending on how you look at it, because it was all smoke and mirrors, around the Tango protocol. You also have Cardano, which literally in 3 months' time, and I haven't checked the latest price, but 3 months ago, Cardano was on the back of a paper napkin, and now the thing has close to a $5 or $10 billion market cap on the coin side. There's John McAfee out there who is a respected person, but is a little bit also off on the deep end, in terms of eccentricity, right? So he's out there, pumping a bunch of these coins and stuff like that, and who knows what's his motivation. And there's something right now with Verge in terms of ups and downs and the concept of privacy. And I think, I'm going to just state it out front. IOTA, I do not personally have positions in IOTA. I do not have a position in Cardano, nor do I have a position in Verge. I've taken a look at these coins, and for personal reasons, I've chosen to pass on them. I have friends who've made a lot of money on them, so just because I pass doesn't mean that, I'm always right. But, in this conversation, it may come across as me being critical, and I just want to be upfront. I currently don't have positions, and I don't have any. I don't have any short-term or even medium-term plans on taking positions in any of those coins. So, let's just put it out there and chat a little bit about it. Love to get your opinions. I've got my opinions too, and just kind of
Yeah, so I mean, a couple things. I mean, obviously we can have lots of discussion around that. I have bought and sold those positions, and I've made massive profits. I think I've pulled out 500% and 300% on IOTA, but I wouldn't own it. I wouldn't hold it. It's not in my long-term portfolio, but you can take advantage of some opportunities there. Same with ADA, Cardona, and also with Verge, what you said. Now, you started by talking about John McAfee and him pumping these coins and being a respected member of the community and whatnot. I'm not sure how many people consider him a respected member of the community.
Respected might be too strong of a word. He's a known member. Is probably the better.
He's a known member, and he definitely can move the needle. And what he's been doing over the last week or two is basically pumping coins, shilling them is what we call that. And Verge was one of the first ones that he did that with. The one thing, again, I was saying earlier how we have all these like custom words or whatever that are used in this cryptocurrency space, and I talked about that just a second ago. But another one that we use is FOMO, fear of missing out. And I think that word came before cryptos, but it's really used in this space, fear of missing out, FOMO. And so what we're seeing is, you talked about, the investors kind of, moving around their temperament or whatever, their sentiment. And, when you look at the tech stock boom of the 90s, that was all driven by VC, by venture capital and Wall Street money. So those are what's called an institutional investor. So in the world of investing in the stock market, right, it's been around for 100 years, whatever. In that market, you have what's called institutional investors, and these are guys who manage pension funds and hedge funds, hundreds of billions or trillions of dollars. In the market, we call that smart money. So what happens is, and then we would be dumb money. So what you always want to do is you look at what's the smart money doing? They're going long on this, or they're shorting this. What's the smart money doing? And so the reason why I bring that up is because in the tech stock boom of the 90s, it was all what we call smart money. Now, this market has all been driven by crowdfunding or dumb money. And the institutional, the smart money is just now about to start getting in. And the reason why that's important is because dumb money, they don't have the money, the track record, the history, the knowledge. And so they're very easily swayed by sentiment, right? This is just me and you. This is mom and pop putting our hard-earned money in, and we're not as experienced and intelligent, and so we're much more driven by sentiment. And so we're seeing it swing more wildly. And then you have guys like McAfee, who's a respected known member or whatever, and he pumps these, and then everybody has this FOMO. So they see one jump up 200%. Oh, I'm missing it. I got to jump in. Oh, this one's jumping up. I got to jump in. And what I want to say about that is that, you know, in my portfolio, our portfolio, we we've missed out on some of those ones that have gone up massively. And everybody has FOMO about they're missing out on it. But the fact is that our portfolio has done amazing. I believe it's up like 7,000% this year. And so we have to be in life in general, we have to be happy, thankful for the things that we have, and not always worrying about what we don't have. And so, you know, we had just in the last couple of weeks, we had two that shot up almost 500%, and we took massive profits on that. That was amazing. So we didn't get one that went up 200% or 300%. We had two that went up 500%. So I'm happy about that. I don't need to be afraid, oh, we missed out on this one and that one.
Yeah, I think, no, I agree with you. So let's actually, I think it'd be a fun one, you know, since Verge has had some recent controversy. You know, let's dive into it, and, you know, let's clear out the, you know, crowdfunding side of it. Let's clear out the chatter. And, you know, I'm going to start by giving my opinion in terms of how I've looked at Verge. And I'd like to kind of get your thoughts because, you know, we've looked at it from different angles, and, you know, always like getting your opinion on things. So, you know, the way I look at things, because ultimately what we're doing is we're buying technology, or we're investing in technology that has a concept of potentially changing the world. And this technology has some sort of fundamental paradigm shift. And me being, you know, a tech guy by background, right? I started as a developer and, you know, got into infrastructure. You know, the first thing I always do is I, you know, dive into the repositories. Right, so I go to GitHub, and all these places have either their GitHub handles or, you know, however they're handling their code repositories, and I start actually reading through the code. And I'm not saying I know everything about coding practices and protocols and everything like that, but I always start by reading through the code and combing through that all, because it gives me an understanding of, you know, what's real and what's not. So, like, for example, you know, when I was looking at the IOTA side with this Tangle thing, you know, conceptually it sounded really good. But when I really started diving into the code, like, it just didn't add up. And I'm not saying I know everything about development, but, you know, I've done a few things that, you know, things should logically align and things should make sense. And without getting into, you know, beeps and clicks and, like, talking about functions and calls and stuff like that, you know, that for me is like kind of the early indicator, right? Because if I'm buying some, you know, if I'm buying the algorithm of what might be Google's, you know, magic algorithm that'll take over search or something like that, I kind of want to see, given that these companies are all, you know, quote unquote open source, or they have some sort of release to them, you know, that's kind of the place I start. You know, so when I was looking at, you know, what's kind of held me back in going into, you know, Cardano and also Verge is, for me, the amount of hype and, you know, valuation of the coin, even though I mean, I know I've missed out because, you know, you've made money riding volatility and stuff like that. I've backed out. It doesn't match up with me in terms of, like, how much of the code base has been developed, the strength of the developer community, how many people are working on it. Like, that is just a little too outsized for me right now as compared to some of the other ones out there. So that's like my first angle looking at it. I'd be curious, you know, what your thoughts are and everything, you know, thus far on that side.
Yeah, and that's a great point. And again, right, going back to the FOMO, I always say that you know, the number one rule to making money is never to lose money. And so sometimes by jumping into these that are going up really big, you're hoping to make a lot of money, but it's too much risk. And so I might rather take a base hit or a second or third instead of trying to swing for the home run and striking out. And so, you know, by jumping into these things to hopefully make 200, 300, 500%, it's just too much risk. I'd rather just consistently hit 300%, you know, for example. So we have so many opportunities that are out there. There's no shortage of opportunities, and so we're going for more safe projects. Now, to go back to what you said, yeah, for sure. So the beauty of most of these blockchain technology companies is that it is open source, and so it is available for us to look at the code. Now, some of the code is kind of open source where it's like C++ or JavaScript, and some of us can understand that. Some of it is a proprietary code. So, we're not always able to understand the code exactly, but what we can see, and any of you could see, is we could see what Charles was just saying, is we can see how many people are working on it, how often they're working on it, and what kind of stuff they're working on. And so just for example, to go back to what you're saying about Verge, when you look at the commits in the repository, there's massive gaps in there. Just recently you can see a little bit more action, but if you go back, I mean, there's months that go by without any action. And so that's definitely not a good sign, especially of a company that's getting the valuation that it is and going up as fast as it is. So, yeah, that's definitely a red flag for me.
Yeah, no, I mean, the example I like to use, it's always, I'm not saying history is the equivalent of what's going to happen, but did you ever follow, what was her name? It was like Thermoscale or whatever. It was the girl from Stanford that had the big medical blood testing company. Did you ever follow her?
Wasn't that it was one of the founders from Google, is his wife, right? It was a
It was, let me look that up again, just so I have my facts right. But this is,
something 21 or something like that.
it was like thermoscale scam. Let me look. It was basically this. I can't remember it off. This is just like an analogy that came to my head. But, this girl, 2 or 3 years back was on like the Forbes billionaire list.
Uh-huh.
So she was like, geez, well, let me just look this up. Elizabeth Thermo or medical scam Stanford or something. Theranos. Sorry, Theranos. Do you remember Theranos at all?
I don't know.
Okay, so Theranos, I'm going to share my screen real quick on this. Let me click this up. If my computer will work. Theranos, a couple years back, was the poster child of, medical.social, like medical technology unicorns. And there was this girl, Elizabeth Holmes. The company had $700 million invested into it and peaked out at a valuation of $9 billion. And literally what they were based upon is they had this special blood testing formula or whatever that would like completely revolutionize how, we'd go about testing our blood. Mm-hmm. And the marketing behind it was amazing. I mean, they had Walgreens on board, they had CVS. Yeah, basically, yeah, I mean, this was huge. I mean, this was big. And at one point, Elizabeth Holmes was like on the Forbes or Fortune, billionaire list. I mean, this thing was big. And the fundamental problem of what happened was the product actually never worked, right? So all the hype, all this sort of stuff, I mean, you're dealing with like FDA stuff and medical devices, maybe they had the equivalence of like the McAfee's of the crypto worlds or whatever, pumping this thing, and this thing was worth billions. And you had all these people, anyone who raised their hand, this was the thing that if you actually read this article, you had a Dr. John Ioannidis, saying, hey, this was back in like, 2010, saying, hey, there's a problem here. This doesn't add up, something doesn't smell right or whatever. And ultimately, the whole thing popped, and that was because fundamentally speaking, the technology just didn't work. Yeah. So I'm not saying, this is what's occurring with Verge or Cardano or, IOTA or some of these, more exciting to watch, altcoins. I mean, the thing is, I'm sure there were investors in Theranos that, got in early, rode the wave up and got out, when they could get out. But those are all the insiders, right? And, as much as, you might have relationships or I have relationships, when it comes to, this crypto space, for a lot of these, we're outsiders looking in. And that goes back to, what we might call fundamental analysis or things like that. I just start with the code, and going back to what you're saying, when the code, I don't know if I can come up with like a funny name, but it's like, what was it? If the glove doesn't fit, you can't convict, right? So if the code commits don't fit, you can't you can't commit
Yeah.
to the coin. I don't know, I'm just kind of joking now.
Yeah.
Good point. But I'm not saying, I mean, I could be wrong. So, I always find it concerning. And, there are others who will, ride those waves and make a lot of money doing it and things like that. And, I just don't have the, I guess, call it abilities, or, I'm just not capable of riding the hype wagon. And as shown over the last weekend where, I tried to play a little bit on the hype trail, every time I do it, I end up losing money and getting in trouble. So it's probably better. I'm back to kind of long-term fundamental research and analysis and everything on that front.
Yeah, I think I think one thing that you have to say though is that a lot of what we're investing in, and this goes back to what I said earlier, is that we're investing in technology of the future. So a lot of these companies that we're investing in don't have fully functioning products, and even like Ethereum, which is number two in the space, is a massive giant in the room here. Their technology is not perfect either. So it doesn't always have to be perfect, but certainly they shouldn't probably be getting the valuation that they are when they're so far back. So, but it just goes back to safety. I think just there's no shortage of good projects to get into, and let's just try and pick the safest, most profitable ones.
Yeah, no, definitely. So moving on. Oh, I apologize. I had some comments that I made, some inappropriate comments, and I apologize. I will refer to Elizabeth as a woman moving forward, not as a girl. Sorry about that. Sorry, I was just called out on Facebook, so my PC filter is probably a little malfunctioning this morning.
Okay.
Oh, it happens. No, but let's move on. I mean, so the market. So we've got Christmas time coming around the corner. We have the end of the year. I think there's going to be a lot of volatility. What do you think? I mean, there's going to be volatility. What do you do? Do we try to time this stuff? Do we just kind of let it go? What are your thoughts?
So, obviously it's going to depend on you and your situation, what you're trying to do. Yes, the markets are going to be volatile. Regardless if it's Christmas or New Year's, the market's going to be volatile. Cryptocurrencies are volatile. I just showed you the last 6 months, they're volatile. The future is going to be volatile. So yes, it's volatile. Yes, the next couple of weeks are probably going to be even more volatile than normal because of the factors we talked about with Christmas and end of year, tax situations. Also, it's time for them to be volatile, right? And if you look at that chart, you can see it's time for that correction. So yeah, they're volatile. Now, as to what you're going to do about it, it just depends on you, depends on your situation, depends on what your investment strategy is and whatnot. As I've explained, for me, I believe that I'm in on the very best projects. I believe that I'm in on the projects that are going to be market leaders and dominators in the future. And so for me, I am going to just hold them and I'm not going to do anything about it. Now, I think it's important. I was actually going to put something together, and I probably still will. So everybody knows who Warren Buffett is, but why? Why do you know who Warren Buffett is? He's just some old dude from Omaha or whatever, right? The reason why everybody knows him, he's a household name, is because he's the single best investor in the world, the most successful investor. And so he does what he calls value investing. And so what value investing is you spot a market leader, a world dominator, and you buy them for a good price, and then you just hold. And so, what we do is we look at these companies that we believe will be those market dominators. we establish what we believe to be a good price to buy them for. We buy them under that price and we just hold. Now, let's say that we believe that anything under $100 is a good price to buy into that company, and the price drops to $50. I still believe that up to $100 is a good price to buy that company at, and I'm just going to keep buying as long as it's under that $100 price. I'll keep buying it. If it goes up to 200, I'm not going to buy it anymore. But if it drops back down below and I want to place some more money, I'll buy back in. So we establish what we believe is a good price, as per, like I said, Warren Buffett does, and we buy and we hold. And so that's what I'm doing. And so for you, if you have found those companies that you have that long-term conviction with, then I think your best bet is to hold. If you're with questionable companies or companies that you really don't know anything about, just so, some YouTube or Facebook or Twitter guy told you to buy it, but you don't really understand why. You don't. So if you're taking information or advice from some, social media influencer or some friend, and they say buy this because it's going to go up, you don't really understand that, and so you don't know why they bought that. So, for example, I have bought Verge or IOTA and got in and got out real quick. And if you were watching what I did and I said, hey, I'm buying Verge, you might buy it and you might want to hold it for the long term, but there's no way I would hold it for the long term, right? So I would just say, depending on what your situation is, if you're in companies that you really believe in to be long term, then just hang on. And if not, then you need to do your research. You need to reconsider what you're doing.
And definitely, and the reality here is, Mark, you and I have been wrong in the past. So just because, we're not, too hot on Cardano or IOTA or Verge doesn't mean that, you may know something that we don't know, or maybe, you're the developer, or, something about their infrastructure or something, and, that's great. And, we're happy to be proven wrong. I mean,
well, the fact is that, yes, I wouldn't say that we're wrong. I mean, I would say that we miss out on big opportunities all the time. There's 1,300 coins. We own about 20 of them or 25 of them. So that means there's 1,280 other coins that are doing really, really good that we're not in. So yeah, there's lots of other coins that are doing great that we're not in. But my focus, again, is not towards what am I missing. My focus is that my portfolio is up over 7,000%. That's what my focus is. And again, they're market leaders, and I think I'm going to do really good.
Yeah, no, that's great. We've got about 10 more minutes left and everything on that. So this might be an interesting one. Let's actually talk, if you want to chat a little bit about this. There's an upcoming fork, I think, on the Bitcoin side. I think, is it this week or next week or something like that? I see there's been some comments on the side asking for that. And, this isn't market sentiment. This is just, hey, what's coming on and how can I take advantage of that? Because I think a lot of people who didn't realize, I think a lot of people were pleasantly or unpleasantly surprised when they found out that Coinbase has been holding their Bitcoin Cash for the last 6 months, Well,
they shouldn't be surprised, because as I pounded the table for months leading up to this, we told everyone, take your Bitcoin from Coinbase. Coinbase came out months in advance of that fork and told everybody, we will not support this. We will not give you your Bitcoin Cash. Everybody knew it months in advance. They told you, I told you, so it should not have come to a surprise to anybody. And if you did, you are not paying attention at all, and maybe you should just get out of the game altogether if you missed that, okay? So it was abundantly clear to everybody that they were not going to support Bitcoin Cash. Now, what they did is they went back and changed their mind. And after the fork happened, they came out and said, you know what? We've decided to change our position. We will support Bitcoin Cash. And in January of 2018, we will give it to you if you had Bitcoin here. So they went back and changed their mind for a good thing, but it should not have come as a surprise to anybody that they weren't supporting him.
Well, I think even people in the know, or who, even, I agree with you that it was out there, but there were a lot of people who were in Coinbase who didn't even know. I don't know if you remember, when.
But Coinbase sent out messages to all their people telling them they weren't going to do that. And that's what I'm saying. If you had money in Coinbase and you didn't, and you missed that, you need to reconsider your strategy in this market, because that information was readily available. It wasn't like you had to dig for it.
Okay, that's a valid point. So moving forward, there is.
I sent out no less than probably 5 or 6 emails and probably 3 or 4 videos just about that. And so I don't know who you're following, but if you didn't see that, pay attention. Now, I just want to back up a little bit. You said a lot of people are asking about forks. So maybe for people, they don't even know what a fork is. So what happens is you have these public blockchains, and anyone can go grab that public blockchain and create a copy of it. And so what happens is when you have developers that don't agree and they want to split or they want to make a copy, it's called a fork. So they're going to fork it. They're going to split the blockchain and create a new one. And then now there's two, and then they can each kind of go their own direction. And this happens all the time. As a matter of fact, almost every one of these 1,300 blockchains that are out there right now are a fork off of a previous one. I think it's like maybe there are like 20 or 30 original ones out there out of the 1,300. Like Dash, for example, Dash is a privacy coin. It's shot up. It's over $1,000 right now. That's a fork. I think it's been forked like 3 times to get to where Dash is today. And so forks happen all the time. So Bitcoin Cash was a fork off of Bitcoin. Bitcoin Gold was a fork off of Bitcoin. I could create Mark's Bitcoin as a fork off of Bitcoin. And just because I create Mark's Bitcoin, 1, doesn't mean it's going to be successful and profitable. And 2, doesn't mean it's going to kill Bitcoin.
No, that's a valid point. I mean, I know probably just in this past month alone, I've popped up, like there's like a Bitcoin diamond that's popped up, a super Bitcoin. I mean, no, the list definitely goes on and on on that side. But let's maybe take a second. There is something, let me just kind of Google it really quick, because there's a date coming up. What is this? Is it the Bitcoin Gold and the Segway 2X? Is that what's coming up? There's something, and I just don't know off the top of my head, but there was something like the date of December 28th sticks in my head. I don't know if there's anything coming up, or maybe I'm just misreading things on that in terms of an upcoming current event.
I mean, I think you're talking about the Segway 2X.
Yeah, that's it. Yeah.
Yeah. So what happened is that's how Bitcoin Cash was created. Is that in August they did a Segway upgrade, and that's what caused the fork into Bitcoin Cash. And it was part of this what's called this New York agreement. And so all these developers and miners, they all came together in New York, and they agreed, okay, we're going to do this scaling solution called Segway, and we're going to install it into two different iterations. And so the first one, they installed Segway in August, and then Segway 2X was supposed to be put in last month in November. And what happened is that in November last month, they basically kicked the can down the road, and they decided, you know what, we're not going to do anything about that right now. And so they're kind of kicking that can down the road a little bit, and so it's going to pop back up again this month. But we don't know what's going to happen with it. It's not really a fork in a sense of the other ones, and we'll see what will happen with that.
Okay, so I actually found what I was looking for, because it just like it popped up on my Google feed last week, and I haven't been out of town for the last couple of weeks in the holidays. I haven't had a chance to really look into this. Let me just read this. It says block number 501,451, which is planned to be produced, roughly speaking, on December 28th, 2017, will be decisive for the old new fork Segway 2X, and a Christmas present for the entire crypto community. An experienced team of developers declares that it will resume activity based on the launch of the suspended project on its website. So blah, 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 blah. There seems to be, the new Bitcoin Segway 2X. It's a new fork of some type, and it's going to be estimated for the 28th. I mean, is this just marketing? Or is there something, looks like they're just doing another project at this point, and it's nothing to be that excited about.
Well, like I said, it's just a continuation of the Segway upgrade. So just as a rule of thumb, for any of you guys who are worrying about, keeping up with this and what does it mean. So as a rule of thumb, just like we said, like Coinbase didn't want to support Segway and Bitcoin Cash in the beginning. So what happens is when you have your money on Coinbase, you don't actually have your money. They have it. So what happens is as you know, right, so these cryptocurrencies are what's called digital currencies. They live as a record in the blockchain, which is like in the cloud. You never download them. You never physically have them. They don't live on your device. They're always just a record in the blockchain. What you potentially have are two keys. You have a public key, which is your address, like your bank account number. You can give your bank account number to anybody and they can go to your bank and put money in. You can give it to me right now and I can go put money in your bank. But then you have your PIN number, which allows you to personally get money out. And of course, you have to guard that. And so we have the same thing. We have a public address, which is my account number. Anyone can have that to put money in my blockchain. And then I have my private key, which allows me to then move that money. So when you keep your money or your coins in Coinbase, they hold your keys. You don't have them. You have no control over your coins. They have your keys. So if you want to never have to worry about this, then you want to control your keys. And that means you would keep your coins in a wallet that you control the keys for. So that could be a wallet, like an app on your phone. That could be like blockchain.info or Jax. It could be a hardware wallet, like a cold storage wallet, like Trezor or Ledger. It could even be a paper wallet, but as long as you have the keys. But if they're on an exchange like Coinbase or Gemini, or they're on an exchange like Poloniex or Bittrex, then they have the keys and they control them. And so then they determine whether you get those forks. So to recap, if you just don't want to have to worry about keeping up with this, control your keys. Every time there's a fork, you'll get access to it.
No, that's a good point. A lot of people think they've got their money in Coinbase, and that's a good thing. And, Coinbase offers convenience and an easy way to get into the world of crypto. But I think everyone who's in crypto knows that, Coinbase is not a very good long-term storage option for your cryptos. And I think we're going to probably wrap this up. It's been almost an hour that we've been on. But to just kind of wrap things up for people who are paid subscribers and members of our community, tomorrow evening, I believe it's 8 p.m. Eastern or maybe 7 p.m. Eastern. I don't know off the top of my head. And there's an email that went out to our group. We're actually going to be doing a full-on demo, step-by-step going into, hey, how do I get my stuff off the exchanges? How do I put this in more of, soft wallet or a digital wallet? How do I get into the hardware wallets and everything like that? And maybe, if I look into paper wallets on that front. And the main benefit, there are a variety of benefits, but the one benefit of having, your stuff in a wallet where you control is when Bitcoin Gold or Super Bitcoin or Bitcoin Diamond or Bitcoin Cash or whatever that comes on, you actually will get those Bitcoins versus if you just leave the stuff in Coinbase, maybe Coinbase will get it to you, maybe they won't, right? And for all those people, what Bitcoin Cash that came out, I think it was over the summer. So if you had all that Bitcoin Cash, you may not have gotten it. And if you didn't know about that, and I hear what you're saying, Coinbase was specific, but I even remember us having a conversation with Dr. Boyce Watkins, and he was even aware that he had Bitcoin Cash due coming his way, right? So in his case, I don't know his specific numbers, but he had a sizable amount in Bitcoin, and he would have had a nice, maybe it's just a good Christmas present, right? You could have gotten some Bitcoin Cash, but maybe if he didn't know about it, or he never found out about it and his stuff was in Coinbase when it happened, he would have missed out, on Bitcoin Cash. And, that was probably like a 1-for-1, right? So if you had 10 Bitcoins, you would have gotten 10 free Bitcoin Cashes.
Yeah, with every fork, that's what happens, yeah.
So if I didn't know about it and I just had, 100 Bitcoins, sitting there, I would have gotten 100 and I left it in Coinbase. I could have missed out on 100 free Bitcoin Cashes, which at $2,000 each is, that's more than play money. So,
yeah, for sure.
Alrighty. Well, hey, great to catch up with you, Mark. Thanks for everyone who have listened in. Wow, we still have almost 200 people that are still tuned in live at this point. So either people just have some free time or who knows. But thanks everyone for tuning in.
Before we sign off, we just want to talk about the portfolio real quick, or is that going to be later in another conversation?
I think let's save that for later.
Okay.
But you and I could just go on and on and on about this.
Yeah, I know. We've gone long. So yeah, we'll save it for the next call.
Well, let's save that for the next one. But generally speaking, I know we've been talking about doing things a little more on a scheduled basis. So probably I think it'll be either Monday or Tuesday morning. I mean, obviously I didn't go for yesterday because, you know, we all had personal issues to attend to. But I think generally speaking on Monday or Tuesday mornings, we'll be doing these, call it market update calls, sentiment type discussions and things like that. And then, you know, that'll be regular. That'll be a more, you know, we'll be moving towards a more regular series on that front, if that's the right term to use. So,
okay, great.
well, guys, thanks for tuning in, listening in. For everyone who's here, Mark and I just love talking about this stuff. So we'll keep talking your ear off as long as you're willing to listen. And we'll see you guys next week.
Bye, guys.